This week on Generating Alpha, I'm joined by Mike Anders, one of the most influential forces in global finance and technology investing today. As a founding partner at ICONIQ Capital, Mike has helped steward the wealth of Silicon Valley's most prominent founders, including Mark Zuckerberg, Sheryl Sandberg, Jack Dorsey, and other transformative entrepreneurs. Under his guidance, ICONIQ has grown into a powerhouse managing over $100 billion, blending family office, venture capital, and philanthropy into a single, uniquely impactful platform. Michael's story begins far from Wall Street or Sand Hill Road. The son of two professors, he grew up between Palo Alto and Providence, absorbing lessons on discipline, curiosity, and long term thinking. Those early influences shaped the investor and advisor he has become, one who bridges worlds between academic rigor, deep personal trust, and high stakes capital allocation. In this episode, we'll dive into Michael's upbringing and the values that shaped him, how ICONIQ became a behind the scenes giant backing some of the world's most influential companies, and his perspective on trust, discretion, and legacy in the modern age of wealth management. If you enjoy this episode, please follow the podcast and rate it a 5 stars on Spotify, subscribe to the YouTube channel, and share it with anyone who you think might find it valuable. I really enjoyed talking to Mike on this episode, and I hope you guys enjoy listening. Thank you. Thank you, Mike, for joining me. I really appreciate it.
My pleasure, Amir. Thank you for having me.
So I want to start where I always do, at the beginning. Tell me a little bit about your childhood and upbringing. And you had two professors as parents, if I'm correct. You grew up between Palo Alto and Providence in Rhode Island. What was your childhood like, and what were the conversations around the dinner table like growing up?
So I think we all have interesting childhoods and they shape us, obviously, but in many ways, to be who we are today. I would say my childhood was not as glamorous as you might think. I did was born in Buffalo, New York, but very quickly, I think at age 1.5, moved to Palo Alto. Both my parents were professors. My mom was in medical school at Stanford. My dad was the chair of psychiatry at Stanford. And so at a very, very young age, I ended up living on the Stanford campus. And then, without much of a say, when I was 13, my parents both got job offers at Brown University. And so they decided to leave Stanford and move to Providence, Rhode Island. And, I think there was a fair amount of pressure, not necessarily to be a doctor per se, but to be smart, to be successful. And I think there was also a lot of personal issues going on at home that left me sort of feeling like it was going to be hard to live up to their expectations. And at the same time, I'm not sure how involved on a day-to-day basis they were in my early childhood. And so I kind of felt alone a lot as a kid. I was an only child for 8 years. And then I had a brother come into the mix, and then another brother come into the mix 3 years after that. So I'm 8 and 11 years younger than my brothers. And I think a lot of my childhood was sort of looking towards adulthood, but not necessarily being connected to it, meaning dinner table conversations were largely academic. They were about science, they were about psychology or psychiatry and neurology. They were a lot about politics. I don't remember specifics, but I was born in 1972. There was the Vietnam War, there was Nixon, there was Watergate, there was all these things that were sort of hangovers. Politics was a big thing. My dad marched with Martin Luther King. My mom was at Woodstock. And so activism was a big part of the dinner table conversation, so to speak. When I was 7, actually, or 8, my parents decided to take a sabbatical from Stanford and they went and taught in London at a medical school. And so I spent second grade in Dulwich Village. I had to wear a jacket and a tie to school. And so, there were so many amazing experiences and I was privy to so many amazing conversations, but I don't necessarily know where I was part of them. And so there was a loneliness to my childhood, but also a privilege to it without a doubt. And so, yeah, that's pretty much my background. Happy to dive into any of it more specifically, but at a high level, that was sort of where I fell.
And on the topics of the conversation of politics around the dinner table, One day you were scrolling through kind of the channels on TV and you came across C-SPAN. And you came across what you describe as this very charismatic guy by the name of Bill Clinton. And you kind of call him your first role model. Can you tell me about what Bill Clinton meant to you and what was it about him that stood out to you?
I think without sounding too sappy, Bill Clinton represented a few things. First of all, he was sort of a continuation of the activism that my parents embodied and instilled in me, right? Bill Clinton if he wasn't at Woodstock, he was certainly sort of aware and around Woodstock. And if he wasn't marching with Martin Luther King, he would have been. So I think Bill Clinton really embodied a lot of the values that my parents shared with me at a very, very young age. I think for me, I just felt pretty inadequate as a child. And so I felt like the way I could get attention from my parents was actually not getting good grades. So I didn't. And it was actually raising hell. So I did. And I'm not proud to say, but I was not a great student in middle school, not a great student in high school. In fact, I'm not sure I would have gotten into college if it wasn't an ability to play soccer and have been recruited to play soccer for university. And so I kind of got to college sort of feeling quite low, academically challenged, socially strong, but knowing that it was coming at the cost of really a conflict within who I could be. I always felt like I could do better. I could be someone better. And so as you probably have heard me say somewhere, it was quite random, but I was at a very low spot. I mean, I was literally channel surfing, right? I mean, channel surfing pretty much epitomizes like getting to C-SPAN and like, I mean, anyone who's on C-SPAN at 17 or 18 or 19, however old I was, there you are really channel surfing. But as like luck would have it, it was at this moment where I knew I could be better. I knew I wasn't living up to anything close to my potential. And here on C-SPAN was this incredible, young, energetic, charismatic governor of Arkansas. And I just happened to hit the channel when he was like opening his mouth to speak. And he just was everything that came out of it kind of was mesmerizing and really echoed a lot of what my parents had espoused during my childhood. And so I very quickly and not from lots of comparing and contrasting sort of gravitated to this very motivational, inspirational figure. And then he was, I think, also not too long after announcing, Al Gore as his vice president. And it was sort of these two guys that would jog and they would talk about climate change and they would talk about, values. And so that was a monumental moment for me. I probably didn't fully appreciate it at that time, but for other coincidental and not coincidental reasons, it wasn't long after when I sort of hit rock bottom at that moment of my life and got interested in a few things, partly through luck, that really turned me into a direction that lifted me up. And again, around this same period of time from witnessing Bill Clinton on TV to getting introduced to the debate team in college, to being cajoled to run for president of the student body at the University of Rhode Island and winning, to going and doing an internship for then Congressman, now US Senator Jack Reed. All of these things happened probably within a 24-month period of time for a guy who didn't even know where the library was his whole first year of college, to then, graduating, I think, with like a 3.4, 3.5 GPA and a double major, and having done these internships and experiences and president of the student body. It was a very transformative period of time and a lot of lucky breaks, a lot of grit, but also it pays to channel surf from time to time.
And it's fascinating because looking back, you might think, what would have happened if I didn't go on the channel, go on C-SPAN when Bill Clinton was speaking at that time, who knows? And you interned for Congressman Jack Reed between your junior and senior year of college, if I'm correct, and Congressman, now Senator. And he gave you the advice to gain some experience outside of politics if you wanted to go into politics. And that kind of got you to go to Wall Street. So my question is, how did it lead you to Wall Street? And one of your first experiences in Wall Street, which kind of was the starting point or led to your eventual interest in starting of ICONIQ, was commercial donor advised funds. So, how did you get to Wall Street? What led you to it? And how did you come across commercial donor advised funds?
Yeah, I love these questions. So, I don't remember the year. I think it was 1993 or 1994. 1994. I went down to Washington, D.C. I had been awarded an opportunity to work for free for then Congressman Jack Reed. I bunked up with a friend of mine in Foggy Bottom in Washington, D.C., and it was a very cheap rent for me. I was unpaid working for the senator or congressman, and ended up, working for a restaurant called Planet Hollywood at night to pay the bills. And I remember every morning getting up extra early, and I would jog from Foggy Bottom around the White House trying to run into Bill Clinton and Al Gore jogging. That was a big thing they used to do, is their jogging cade. And then I would, head to Capitol Hill. I would work for the congressman. I was writing position papers. I was supporting the legislative affairs folks. I was so interested in it. I worked pretty hard, sat in hearings, took notes, did whatever was asked of me in the office. And then I would leave after a full day and go work so I could afford the minimal rent that I had in DC. And after the end of the summer, having had, very, very little experience with the congressman, but having been invited to a lot of, the congressional staff, meet and greets where I met a lot of dignitaries, a lot of other congressmen, senators, cabinet members. I did get this moment with Congressman Reed where, he asked, what did I want to do? And I remember saying to him at the time that I really believe in public service. I want to be him someday. And I remember him telling me that, I should strive for it, that I have good energy, that I worked really hard, and that I clearly care about people and the issues. But his advice, if I asked for it, was don't go into politics right away. Go back to your senior year of college, take as many econ classes as you can, as many accounting classes, as many finance planning classes. Go to Wall Street, get a job on Wall Street, do the best I can to absorb and learn as much as I can about the economy, the private sector, investing. His advice, if I don't want to put words in his mouth, but something along the lines of, if I start in politics out of college, I really won't know anything and I'll never get out. But if I go into the private sector and I work in the private sector and I learn about investing in the economy, I'll be a much more valuable public official because I will have worked and learned something of value. So that was always the plan. And I had really no support in the form of perspective from my parents because they were academics and they didn't understand Wall Street. They didn't understand investment banking. They didn't understand anything about the journey I was about to embark on. And I didn't really have anybody in my orbit that could advise me. So I kind of went to the alumni network before I graduated from college, and as luck would have it, I ended up getting a job at Fidelity Investments. And I remember after graduation, on graduation day, catching a train, an Amtrak to Penn Station, moving into an apartment that I had found, sharing it with two roommates who I didn't know right behind Lincoln Center. And I think I was starting work the next Monday. And, I was what they called an equity analyst. It was sort of a 2-year program. It was actually much more operational and administrative than I expected or understood or knew. And I really quickly came to realize that one, this was not a job that played to my strengths. Two, it was a job I was not learning the things I personally wanted to learn. And so I actually immediately began looking up and out. I did a program at Columbia for a year that was part of the School of Public Affairs, but I was also taking business classes that could have applied to a business school if I wanted to get my MBA. And I think the combination of spending the 2 years in New York City, working at Fidelity, learning more from building my own network and learning more about what it meant to quote unquote be on Wall Street and taking some classes at Columbia really continued to push me towards the things I didn't want to do versus the things I wanted to do. Very long story short, I always wanted to live abroad. I always had a sort of affinity to Paris and France because my parents were sort of Francophiles. And I ended up deciding not to go get my MBA or my law degree, two things I had been considering, and instead move to France, see if I could land on my feet there, see if I could even figure out a way to learn the language and get a job. Anyway, I ended up spending, 2 years in France, ended up getting a job in investment banking, working for Societe Generale. That was really interesting because that was when they were considering unifying the currencies throughout Europe into one, the euro.
Yeah.
And it was also at a time when there was a lot of tumult in the market with the collapse of long-term capital management, the Russian debt crisis, the Asian currency crisis. There's a lot of things going on, and I ended up sort of being right at the epicenter of it, and it was an incredible chance to learn. I'll spare you lots of details in that, but a few moves later, I ended up starting a company that was building commercial donor advised funds. One of the things I left out, which is actually not insignificant, is while donor advised funds have been around for 60, 70 years out of community foundations and Jewish federations, Fidelity Investments was actually the first firm, commercial firm, to launch a donor advised fund. And actually, to the uproar of traditional community foundation donor advised funds that didn't understand how could Fidelity, a for-profit, a very for-profitable company, get into the business of donor advised funds. And while I had nothing to do with the launch of Fidelity's charitable gift fund, I was at Fidelity and I was aware of it, and I thought it was very interesting. Fast forward 5, 6 years, I just found myself at a moment when I met a fellow entrepreneur. We shared this idea and we created a company to basically build the Fidelity charitable gift fund, the product at least, but to white label it for all the big private client firms like Morgan Stanley, JP Morgan, Bank of America, Northern Trust, Credit Suisse, back in the day, Smith Barney, Morgan Stanley, Dean Witter. And the idea was that these were much more traditional platforms with high net worth individuals, and they should each be having one of these private label donor advised fund solutions for their clients. And so that's how I ultimately made my road into creating this company, which ultimately took off and then sort of came crashing down. We sold it for peanuts, and I ended up going to Fidelity and co-heading kind of their charitable services group, which was a whole nother chapter in my life and led to some amazing other things. But that's sort of the full story of politics and public service to donor advised funds.
And I want to kind of set the stage for ICONIQ here. You've said that before starting ICONIQ, you were scarred by the wealth management industry to an extent. What left that impression for you?
So, no surprise, the previous experience really is what created an awareness of some of the problems of the wealth management industry. So while Fidelity and their charitable gift fund was raising, you know, billions and billions and billions of charitable dollars into their charitable fund. Most of those dollars were coming from ultra high net worth clients of Goldman Sachs, Morgan Stanley, JP Morgan, et cetera. So the idea for me to create a competitive product and white label it for these big firms that naturally should be marketing this product to their high net worth individuals really made sense. And as we signed up almost every single one of these clients, I thought the business was going to be a huge success. It ultimately failed because while we had all these clients, which I thought would be the hard part, the really hard part was getting the attention of the wealth managers. Their job is to sell stocks and bonds and funds. They understand how to do that, and they get paid a lot of money to do that. And here was this little old charitable product that was cute, but didn't really pay them, had the complexity of understanding trust and estate, philanthropy, talking to clients about their emotions and what they cared about. And so sadly, my company failed because the product basically sat on a shelf and collected dust at JP Morgan, Morgan Stanley, Smith Barney, Northern Trust, et cetera. And it was there that I saw the wealth management industry and really the relationship managers on these platforms as more interested in selling hedge funds that pay them lots of money than engaging their clients in a conversation about impact and making the world better. Not true of everybody, but at least back then, generally true of the industry. And I just it left a scar. And
Yeah.
so that was the beginning of my understanding of what felt broken to me.
And around that time, a lot of your clients were saying you should meet this guy named Divesh Makan. And you eventually go and have a coffee with him and you describe it as love at first sight. What was it about that meeting that convinced you that he was the right person to build with? And what was the start to Iconic? Where did the idea come from?
Yeah, so it is true that a handful of people, some of them were sort of friends of ours and intermediaries and some clients, um, did continue to say, you got to meet this guy, Devesh. And my first impulse was, thanks, but no thanks. I'm done with anyone who's a wealth manager at a wealth management firm. And the pushback was always, no, this guy's different. This guy's special. So given we both worked with similar types of clients, but did two very different things for them, we agreed we should go for a coffee. And within a very quick moment, he understood that I had a pretty interesting background. I had spent half of my career either in investing, investment banking, or in and around capital markets, or advising very affluent individuals on their philanthropy, and had an understanding of trust and estate and tax and philanthropy and some of the softer issues which are really important to ultra high net worth individuals. And so he quickly sort of said, what are you doing at Fidelity Fidelity Charitable Services? Why don't you come join me at Goldman? And I was immediately torn because in my mind, there was no way I was going to go into the wealth management industry and certainly at one of these firms that I saw as challenged. And on the other hand, there was this wildly intelligent, charismatic, entrepreneurial mind that was already thinking about building the business differently than most people would do. And so that conversation did go on for a long time. I would continue to show up skeptical and leave inspired. And after some period of time, I agreed to join Devash because he really was a force of nature, very, very talented, very smart, and he had a real love for his clients that was unique and real, and and something that I shared with him in terms of how I really admire people and wanted to serve people.
And I want to talk a little bit about what Iconic is now. But before we get there, what do you think is necessary for me and my listeners to understand about the building of Iconic, all the way from when you started it to today, to kind of just get a sense of what it is, what the core principles are, what the tenets are? Yeah.
So I think the core tenets of Iconic are listen more than you talk, even though I'm doing a lot of talking right now. Um, Build genuine, lasting relationships, not with some transaction in mind, but because you genuinely care about the human and you want to help them in any way you can. Create goodwill, um, not for the sake of it, but because you genuinely want people to live a happier, healthier life, and you want to create this goodwill, um, and always be learning. I think generally speaking, a lot of industries, certainly wealth management, can be a mile wide, but an inch deep. And one of the things that was a tenet for us was go deep and go wide. If you're not learning, you should quit. And being an inch deep is you become a commodity and you become transactional. And so those are sort of the tenets of building Iconic. And it wasn't something we wrote down. It just was who we were. And I think in the end of this long party, I think it will go down that, well, Devesh and I have many strengths and weaknesses and differences. I think those core tenets are foundational in our DNA. That was sort of an unwritten thing. It just was. And I think that's very core to who Iconic is.
And Iconic now manages over $100 billion, yet remains relatively unknown and under the radar outside of the world of finance. And I love the analogy you describe it as a caddy to a golfer. Can you kind of just expand on that and tell my listeners a little bit about that?
Yeah, I mean, I think taking one step back and going back to one of our early tenants, we understood from the very beginning, and we were really kids. We didn't know anything. And it wasn't about what schools we went to and what grades we got. Life is also about real experiences, running businesses, being exposed to volatility and facing adversity. And in our lives, we had some of that, but not nearly as much as folks that are 10, 20, 30 years older than us and running things. So for us in the beginning, it was less about how much wealth someone had or didn't have. It was really about who they were and what they ran and what could we learn from them by listening to them. And if we could curate a group of clients, founders and CEOs, star athletes, star entertainers, and we could spend our time listening to this diverse group of thought leaders, the collective wisdom of these clients who sat around the proverbial living room table would really help us form a view of the world. And because we were managing everybody's wealth, their incentive was to share the whole truth and nothing but the truth with us. But it was the aggregate of all this wisdom versus any one individual that helped us really think about where the world was and where it was going. And similarly, each of these folks, because they were well known and ran something, their brands collectively opened up a lot of interesting, unique investment doors for us. So there was always a focus on creating and curating an exceptional network of clients who we worked for. And because the job is really intimate and we end up having some incredibly exciting but also hard conversations over the course of these relationships, there's a level of trust that's built up that's incredibly intimate and vulnerable. But we understood from the beginning that no matter how close these relationships became, there was a client and we served the client. And these clients were mostly incredibly well known. And so if they were the professional golfers, if they were the Tiger Woods, we wanted to always remind ourselves we were the caddy and we should be anonymous. We should be below the radar. And that would allow us to operate on their behalf more effectively.
And how do you actually curate that kind of this group and this collective intelligence, especially at this very, very early stages, where when you guys started, a lot of these people who were your clients weren't necessarily who they are today. So how did you kind of curate those? How did you go about finding your clients and picking your clients and just building this incredible network that would eventually become something what ICONIQ is today? Okay.
Yeah. So I have to be clear. There has been an enormous amount of luck in the building of ICONIQ. We've worked hard. We've worked honestly. We've tried to work diligently and create goodwill, and we genuinely care. So we can take some credit for a few things, but the amount of luck over the course of the 20-year arc is undeniable. And so those early clients helped really shape the vision. And they also helped us execute upon the vision because not only were they themselves, as luck would have it, CEOs who became even more well known, they knew lots of other CEOs. And then I think there was also an opportunity for us at the very beginning to really bet on founders who were not well known at the time, who didn't actually have any money at the time. But when you got introduced to them and someone really smart and reputable and in the know suggested we meet this founder or that founder because of what they were building, even if we didn't see the vision of what this particular founder or that founder was building, we did feel their ambition. We felt their drive. And so also from almost the very beginning at ICONIQ, we did place some bets. And our bets were not investments of capital, they were investments of time. And so for some of these founders, some of whom are some of our most famous clients, there were years and years of pro bono work. And it wasn't because we knew these companies would be huge. It was because they had vision and drive, and we liked them. And there was a genuine sense of purpose to want to help them. And the things that they really were not steeped in knowledge with, trust, estate, tax planning, we actually knew a lot about. And those were the things that maybe they didn't even want to talk about, but they really needed to talk about because if these companies worked out, there would be a lot of optimization around their equity ownership that would be meaningful. And so the combination of having a few older established CEOs that were family relationships or relationships we were lucky enough to make and who helped shape this vision, coupled with betting on a few folks, that is ultimately what sort of made ICONIQ's first chapter. And then we did sort of take that luck and run with it. And we spent a lot of time and still do today looking at sort of, the world and understanding from our own client base the direction of where the world is going and trying to sort of think of it as a jigsaw puzzle. Which are the industries where we may not have adequate representation and thus access to? And what are some of the industries that are growing? I mean, when we started the business, there wasn't anything really as known as crypto. There wasn't something as known as AI. And so we do believe that we have to continue to evolve and stay hungry. And we have to continue to stay relevant. And the ICONIQ founders are not relevant, but the client base is. And so how can we keep this client base as relevant tomorrow as it might be today and certainly was 10 years ago? And so we are very, very deliberate about which clients we bring on because we want them to be accretive to this network, to this ecosystem. It helps us think about the world. Remember that collective wisdom helps us get access to very unique opportunities, collective access. And then we feel like now we've really built, while the world doesn't know who we are, the investment world does, and they see our capital as highly value add and strategic. And so there are opportunities for us to invest that are unique to us because of whose capital we have. And that leads us really to a structuring advantage.
And I think it's incredible the point of taking early bets on those people because a lot of firms that are already built up, kind of bureaucratic, institutionalized, couldn't take those early bets on those people and ride with that luck, which I think is a really big differentiator. And on the topic of these very big institutionalized firms, most wealth managers, especially in kind of the below the ultra high net worth individual class, talk more than they listen. But you've made a point of listening more than you talk. How does that philosophy influence how you hire? Because you want a certain type of person who listens more than they talk.
Yeah, I mean, I think so. First of all, the interviewing process at ICONIQ is pretty extensive. And if the candidate sort of makes it through the initial screening process, then there's a lot of time invested in the recruiting process, and it is very much about that. You know, our values are humility, diversity, thinking about uncommon care, and of course, listening. And so as we interview, and there's, obviously multiple interviews that happen for any one candidate, there's a lot of collaboration around that interview process, but we are very much trying to hone in on that. Obviously, Iconic's gotten to be a large firm. We have close to 600 employees. We have offices in Palo Alto, San Francisco, New York, London, Singapore. And depending upon the roles, there's a greater need for listening than others. But to your point, it is important for us to ascertain how curious is someone, how interested in learning are they, and are they a great listener? And that is pretty easy to come by in the interview process, especially as thorough as the process is for us.
And you made the point that this kind of collective wisdom helps you shape your view on the world. So, what perspective on the world and its future have you gained from your clients that kind of shapes how you think today in this environment?
Yeah, well, I think it's come in lots of different forms and over the last few, I would say, investment cycles. Obviously, having a number of CEOs in kind of 2007, 2008, 2009 was very instrumental in us understanding where the consumer was, where consumer spending was going, and where and real estate and how interest rates were being affected. So that was sort of a moment in time. I think a lot of investment team themes around private credit, and we were very early on in that, and sort of the post the financial recession, which was a theme that we played because you were getting paid so much to lend to these middle market businesses. I think even through COVID, there was a lot of opportunity for us to create investment opportunities in middle market, private credit, structured credit, that served us really well during that period of time. I think this moment in time is a particularly challenging time. And I actually would be the first to say anybody who speaks with certainty and conviction, I would run away from. We have not seen a period of transition like this happen this fast, I think, ever since the Industrial Revolution, which was over the course of 150 years. And so the combination of the shifts in geopolitics right now, the current sort of change right now in tone around our country and our allies, coupled with what AI is going to do, both positive and challenges, are things we're paying very close attention to. And we feel quite lucky that on the one hand, we have a number of CEOs of traditional businesses who we're in touch with all the time, understanding how they're embracing AI, how they're thinking about hiring, how they're thinking about job retooling. And on the other hand, we have a number of tech founders in and around, AI itself and the making of these companies. And so the ability to sit in a room and understand how healthcare may be affected by AI, how the automotive industry is going to be affected by AI, as well as ties to, world leaders who are helping us think through, what tariffs mean, what does, job relocation mean. So this is as complicated of an environment as possible. And I think we've done a really good job over the years of building a very, very senior investment team internally, but certainly aided by direct ties to some of the folks shaping both policy and outcomes of business.
And you just spoke about the perspective that your clients have given you surrounding the world today. But overall, what are the most important lessons you think you've learned from your clients? And on the other side, what do you think are the most valuable lessons your clients have learned from you guys?
I don't know what our clients have learned from us, but we certainly have learned from our clients about collaboration, curiosity, you know, partnership, humility. We for some reason and feel a deep sense of gratitude and luck, not only have surrounded ourselves with a client base that is exceptionally smart and relevant, but our clients are exceptionally kind. And the partnership we've been able to build with them as their caddy has really allowed us to learn and grow and build a firm that we're really proud of. And so I think there's been lots of experiences. We have a few clients that are leaders and pioneers in the financial services space, and being able to call on them to think about, even with an ICONIQ launching a new business, thinking about scaling a business, thinking through COVID of how do we deal with this? How do we, think about going back to work? All of those things were lessons learned from a particular cohort of our clients. Thinking about technology and where it's going and how does ICONIQ embed that and how do we embrace technology as a firm has been helpful. Also, the ability for us to listen and learn from many of these tech CEOs and bring that over to traditional business leaders who historically didn't run a tech company. They ran a consumer company or a luxury goods company, but those companies are all becoming techified by the day. How do they embrace enterprise software? How do they embrace AI? So we become this natural conduit between all these currents that are affecting every side of our business and ultimately helping ICONIQ itself be an interesting business that's at the forefront of change.
I'm a big believer in the concept of building meaningful relationships and mentorships. I think of how I to describe what I've been doing for the past year or two would just be building meaningful relationships. And I think as the world goes on, that relationships will become more important than ever because there's going to be much more noise and much less signal. So it's going to be very important to separate that signal from that noise. So my question to you is, what advice would you give to the next generation about building meaningful relationships and how important mentorship is for them?
Well, I think it's critically important for really the reasons you said, and I think it's going to become more and more important. I think you can't push someone to appreciate mentorship. I've found some people seek it and others don't. And the ones that seek it are seeking it generally for an authentic purpose of wanting to learn. They tend to be curious. They want to grow. Some people get that through reading. Some people can find mentorship in other ways. But for those of us who really value personal relationships, mentorship is really something that you seek out and pursue. And then I think the second layer of that is you can get mentorship in lots of different ways from lots of different people. Personally, I've found mentorship from people where I just naturally connected with. I think when you're forcing it, you can absolutely learn from anybody, but the deep relationships that have lasted, in my case, almost an entire lifetime, have come from a genuine, authentic curiosity and an inherent natural connection. I think that matters a lot. And then the other thing that I would say in terms of just relationship building, I think we have gotten to a place where, especially exacerbated by, social media and AI, where the speed at which we move has almost pushed us to a place where we've become transactional and it's hard to avoid that. And so going back to, one of ICONIQ's, tenets, building relationships, not because you expect something in return, but because you authentically, genuinely want to meet someone, you want to connect with someone, and you want to learn from someone, but nothing specific or transactional. I think those are the most important relationships. And so that idea of creating goodwill, of paying it forward, of genuinely caring, we call it uncommon care. I think those are great ingredients in building meaningful relationships. And it sounds so obvious, but most people don't do it. And I think that's something that we're very proud of at ICONIQ, is that those relationships are real, they are authentic, and they're grounded on this, wanting to provide this uncommon care, this genuine interest and curiosity.
I very much agree with you. And I think that especially in this kind of short term, very transactional world, thinking about the long term and not trying to force anything and rush anything too fast is what makes things really stand out. And this is one question I ask at the end of every episode. So I just turned 16. If you were to give one piece of advice to a 16-year-old right now, what would it be? It could be career advice, life advice, any type of advice.
My advice to a 16-year-old right now would be the same advice I give to all my kids, and certainly my now 16-year-old, which is to be curious, to keep an open mind, um, to be empathetic, that no matter how hard a day may be for you or for my daughter, it's worse for someone else. And how do we genuinely care about those that are suffering more than us? And how do we want to partner in a material, authentic way? I think relationships are critically important in the world. And the more curious and empathetic and kind that we can be, the better off we'll do in business too, if that's important.
Well, Mike, it's been an absolute pleasure. I really appreciate you coming on, and I think our listeners really enjoy this.
I hope so. It's been a real pleasure. And as I said, I'm so impressed with the conversations you've had and how insightful your questions are. So thank you for having me, and thank you for having these conversations.
Thank you. I appreciate it.